Right, so we've got an action-packed 30 minutes for you. A busy day for earnings. Motherson Sumi Punjab National Bank came out with their numbers half an hour ago, but that's M&M on the bottom of your screens, where profit after tax, according to wire agencies, has come in at 1,220 crore rupees. We at ET Now had penciled in 1,172 crores. That's the only number I have with me at the moment, and it seems to be in line with expectations, at least as far as the bottom line goes. Remember, M&M as well as MVML are handing in a combined report card. The expectation is that we will see a stable report card with profits in excess of 35%. So right now you're seeing it, according to wire agencies, at 1,220 crores. When it comes to M&M, we of course have to watch out not just for the sale of SUVs, but the tractor sales as well. I don't have any of that breakup with me at the moment. The stock is certainly getting enthused in trade. You can see an uptick. I'm sure my colleague Karunya Rao is joining very soon to give us and decode her first cut analysis as far as the M&M numbers goes, and I'm sure my producers are also working the phone lines. To try and get touch base with a analyst to get you more details. I don't have the detailed press release. Okay, there you go. The revenue seen at 13,520 crore rupees. That's also in line with estimates. 13,200 crore rupees is where we had expected the top line to come in at. The factors to watch out for is, of course, on utility vehicles as well as the tractor business for the financial year. What kind of a guidance is provided? Any word on new launches as well as the timelines? Update on businesses like two-wheelers, CVs and Sangyong, etc. But let me first get you a first cut analysis with Mitul Shah of Reliance Securities, who's joining us here. Mitul, you're seeing a combined report card right now of M&M as well as MMVL. What do you make of it? Revenues at 13,520 crore rupees. Profit after tax at 1,220 crores. These are the only two parameters I have with me at the moment.
See, on a prima facie, numbers appears to be very strong. Revenues are broadly in line with the estimate. We estimated around 1352. It came 13.35 billion. EBITDA margins are much stronger. We expected 15% EBITDA margin. Company reported 15.8% EBITDA margin. So margins are ahead of the estimate. So cost control would be the one of the major reason. And second thing, the tractor reported decent healthy growth of around 19%. And tractor margins are certainly quite higher than the automotive segment. So these two are the important parameters. Apart from this, competitive intensity is much higher, despite that company reported very strong number.
I unfortunately don't have the farm equipment sales figures with me, or if there's been any kind of an uptick on that to watch out for. And of course, that is the big part to watch out for when it comes to M&M as far as tractor sales also go. As well as, of course, new launches and timelines. Okay, margins, Mitul has come in at 15.8%. What do you make of that?
Yeah, margins are 15.8%. Primarily, again, farm equipment reported very high growth, around 41% growth in the EBIT. And that is one of the key reasons behind the margins. And overall, company's cost appears to be under control on the other expenses side. However, the raw material commodity prices are going up, despite that company has reported good control on the other expenses. Going forward, we expect margin would further improve with the tractor volume going up. The second half, which is a generally very high season for the tractor volume, so absolute volume of the tractor goes up and overall contribution of the farm equipment segment on a blended margin increases, and this translates into higher margin for the company.
Even though the sales margins and bottom line have come in above street estimates, the stock is certainly, starting to sell off. Hang in with us, Mitul. I'm also going to invite Ashwin Patil. Ashwin, your first cut analysis, is there something in the fine print? I don't have the detailed press release. I don't know if you have it. We are seeing the stock beginning to sell off, M&M.
Actually, I am also yet to see the fine print, but I think the results have come quite above everybody's expectations. I think so because we were also pinning down EBITDA margins close to 14.8 to 15%, and the numbers have come quite. They have exceeded our expectations, and I think yes, the contribution from the tractor business has been good, higher than the earlier quarter as well as the quarter YOY. And that has led to these kind of numbers. The margins have been quite superior, and the company has controlled a lot of costs on the other expenses side, though we know that the RM prices have been trending upwards. And going forward, I think with a good tractor volumes expected with new launches that the company has done on the tractor side. And as it is, we know that Q3 and Q4, I mean, the second half is always good for the tractor business. And with these kind of numbers, I think, and also on the UV side, we should mention that in the second half, that is a Q4, the company will be coming up with a new model. And also in FY20, the company will be coming up with 2 new models. So that business is also expected for a good revival. But I think, these numbers, the street was expecting that good numbers will be coming from M&M in this quarter, looking at the volumes that the company has done on the FES side, and the LCV and three-wheeler side in this quarter. I think this growth was factored in the price, and that's why somewhat the reason is for the stock to move southward a bit.
As far as the downward risk goes, the M&M press release talks about the trade war and the retaliation that we are seeing from various countries to what has been unleashed by Donald Trump. Upsides, of course, being the monsoons and the MSP hike. Pankaj, you've got the press release. What's in the fine print? Is there something in there that the markets don't like?
Well, overall the numbers are strong, but, even as our earlier guest was saying, that expectations were pretty high going into the numbers for a beat. The numbers have come in line with a slight bit of positive bias. 13,358 and 1257 is the PAT number. This is, I'm talking about M&M plus MVML. Their margins have come in at 15.8. So that's a decent bit of number, and that takes the margin slightly higher. As you said, I would just like to read the outlook apart from the point that you were making, where they say that consumption, both rural and urban, remains healthy. A normal monsoon with a satisfactory distribution combined with recently approved higher MSP for Kharif crops should help support rural consumption further. Let's go across to our guest that we have, Mitul. This is Pankaj this side. I would just want to get a sense on the fact about H2 for Mahindra and Mahindra. What do you think about the second half with the launches that are coming in, with expectations of rural recovery? Earnings upgrade are likely to continue for this company?
The second half, probably by year-end, company is launching 2 new models, one during the festival and second after that. So that is H201, and another is on the Rexton platform, that is SsangYong-based Rexton E4. These two would provide the proper product pipeline for the company. Company is right now losing market share in the UV segment. So probably these two products will help in regaining the lost market share on the automotive side. On the tractor side, farm equipment side, second half has been always the festive season for the farm equipment. Second half is a stronger in general, but here the company's entire product portfolio in both the segment, automotive as well as FES, is rural oriented. Rural has been reviving since last 1 year. Rural segment has reported healthy double-digit growth for the industry. But important parameter on which the rural consumption goes is entirely rainfall and its distribution. Right now, as of yesterday, rainfall monsoon deficit has widened to 10% plus, and for the current month also, forecasting agencies are predicting below normal monsoon. So that will be very important parameter, and right now it seems to be a bit concern even in terms of the distribution also. Few regions wherein cropping production should be high, like MP, Bihar, Jharkhand, where the deficit is even beyond 10%. So that is a bit concern in terms of the M&M's product and market.
Okay. Okay, at this juncture, I'd like to thank all my guests for joining us here on ET Now with their first cut analysis as far as M&M goes. Remember, there's an AGM also today which Anand Mahindra will be addressing shareholders. The top management, including Pawan Goenka, is going to be interacting very shortly with the press. So we'll get to that also as soon as the press conference begins. But that's M&M for you trading